Now, OPEC is not officially increasing its official quotas, but it has increased its actual output for a second month. That's because Libya has recovered from a political crisis that stopped production at its biggest oil field. OPEC Plus is preparing to meet later this week, and there are talks that production cuts could extend well into 2025. We are joined by Hossein Al-Adina, Head of Commodities at TD Asset Management. It's great to see you.
Thanks for having me.
So OPEC Plus leaving something like 2.2 million barrels of oil off the table right now.
Yeah, so I think the challenge that the market has been grappling with for the better part of, frankly, the last 6 months is when we look forward to 2025 balances, on paper, non-OPEC supply is seen increasing above global demand, and you don't need incremental production because that's going to lend to larger builds. I think there's a bit of uncertainty as to obviously what OPEC will do. On our balances, they don't need to bring production back until, if anything, late 25.
Wow.
Unclear if all the OPEC members kind of agree on that. And I think that's what the market's grappling with at the moment.
Apparently the Kazakhs are ramping up their big Tengiz field. They may want more quota.
Yeah, so Iraq and Kazakhstan have both been sort of cheating relative to official numbers. There's been increased compliance from both of them over the course of the last couple of months. I think the country that is of most focus is UAE. UAE has spent a tremendous amount of capital to grow their productive capacity. They were meant to be able to increase production in January by 300,000 barrels a day. MBS flew over from Saudi to visit, I imagine, management. And again, I think that's the biggest uncertainty over the course of kind of the early part of 25. I think, Andy, what the market's not focused on is we do have a new president in the U.S., and more than likely his focus on Iranian sanctions is going to be far more pronounced than has been the case over the course of the last 24 months. Iranian barrels have increased by over 1 million barrels a day.
Kind of a nod and a wink by the Biden administration, apparently.
I think it's challenging to get reelected if gasoline prices are north of $4 a gallon.
Right.
Maybe it's challenging to get elected regardless, but ultimately I think that's kind of why they turned a blind eye to Iran as well as Venezuela. And I think regardless of who was in office in January, there's probably more of a focus. Today, oil is up 2% and change because of news out of the Treasury that they're going to be sanctioning the Iranian dark fleet in a more sort of meaningful way.
Again, they've kind of let something slide, or they haven't been as stringent as they could.
Yeah, and look, I think the market, if you take all the numbers at face value, oil is oversupplied in 2025. If we look back historically, we have this horrible tendency of overestimating non-OPEC supply. We have a tendency of underestimating demand. I think the bearishness that's grappling the oil market today is largely a function of weak Chinese demand in the summer, which I think was a cyclical low in Chinese demand. If you look at most forecasts, they're calling for very little growth out of China in 2025. And I think, if anything, that likely surprises to the upside. So I think that, the risk reward is maybe more balanced than is reflected in positioning in the market. There's very little speculative positioning in oil right now.
And you argue that oil has held up reasonably well this year.
Well, I think considering inflation expectations have largely been reduced, right, which is, people do buy commodities as a hedge to inflation. You've seen inflation expectations come off. We've seen tremendous strength in the dollar. We've seen economic growth in commodity-intensive countries like China disappoint to the downside, and yet oil is still trading, $70 a barrel. It's down 1.5%. And I think that's remarkable in the context of the other three sort of factors that I mentioned, which are all negative for oil.
What would be your prediction then for oil prices in 2025?
I have been in that sort of 70 to 80 camp. I remain in that 70 to 80 camp. I think your downside is greater if OPEC does return barrels to the market. I'm not convinced that they're going to do that. They've done all this work over the course of the last couple of years to tighten inventories, to leap curves in backwardation. I don't know that you just give it up now. There's a risk, and that would take me below the range. I don't think that you get above that range because we do have OPEC spare capacity. We do have inventories building in 2025. But I think we have to appreciate that the starting point where inventories are, whether you're looking at it versus the 5-year average, the 10-year average, the 15-year average, things are tight. And this is a reflection of the fact that, broadly speaking, in the commodity market, commodity prices have been discouraging investment on the supply side. We can't wake up tomorrow morning, Andy, you know this better than I do, and say, hey, we now need oil, because it takes time to bring oil, copper, gold, et cetera, to the market.
what is you've been generally favorable on gold, or you like the look of it. What is your outlook into 2025?
Look, I think gold is going to remain sort of volatile as it has been. We saw, a big pullback following the strength in the dollar, following sort of Trump's win. I think ultimately, and sort of my thesis has been that when I look at emerging market central bank reserves, they hold a tremendous amount of fiat, and they're going to diversify over time, not away from the dollar, but just diversify their holdings. And we have seen a tremendous amount of gold buying from emerging market central banks. And despite that robust buying, the amount of gold they hold as a percentage of their reserves is still de minimis relative to what most OECD central banks hold. So I don't think that trend changes. And I think if we do see any sort of heartburn, anxiety in equities, you will see retail investors, you and I, return to the gold market.
Okay. Why would retail investors come back?
Well, I think if you look at ETF interest in gold, that has been relatively subdued. And I think that's because the opportunity cost, if you and I hold gold, we're not holding NVIDIA or the Mag 7 or the TSX. I think if and when that sort of calms, you'll see interest you'll see interest in gold. Gold serves a very important role in your portfolio. It hedges the tails. It's a good inflation hedge. We are seeing inflation expectations increase again. And again, the dollar is trading at very lofty levels. I'm not calling weakness in the dollar, but from a directional point of view, if the dollar weakens, quite constructive for gold.